Gold pressured by a stronger dollar this Tuesday and hit another four-week low, while silver is also hovering close to Monday's four-week low. Could Friday's jobs report be a game changer, however? Joining us in studio is Mike McGlone of ETF Securities. Mike, thanks for being back with us.
Thanks for having me back.
So let's talk about Friday's jobs report, and could it be a game changer for the metals here, especially after the last FOMC? Does it become more relevant?
Oh, absolutely. The last FOMC really brought tightening back into this year, in 2015. Before that, at the beginning of October, we printed the September unemployment number, and that took a lot of tightening out. That was a weak number, so gold rallied. It started out the month right above 1,100. It went to 1,200 right before the FOMC meeting, and then boom, right back down as the tightening comes back in. So unfortunately, the gold market is completely at the mercy of Fed tightening expectations. And I think that's the key word. They haven't tightened. It's the expectations of tightening.
Right.
So if that happens, yes, but who knows for sure if they will tighten.
Well, let's take a closer look at gold. It had a good month of October, and maybe it's too early to see whether November will be positive, but how do you see the metal set up right here?
Well, I still think it's creating a pretty solid foundation for extended rally. So let's look at this year alone. Gold is down maybe 3-4%.
Right.
The dollar index is up maybe 7-8%. Stock market's back up. Fed tightening expectations are back in the game. And even bond yields have started to go up. So despite many bearish factors, and the commodity market's just gotten hammered. The Bloomberg Commodity Index is down, 20% or so. Despite significant bearish factors, gold's hanging in there. So my point is, if gold's not going to go down in an environment that's very bearish, what's going to take? I think the key thing remains Fed tightening expectations, but it's also somewhat dependent on the stock market. The Nasdaq made all-time new highs again, and gold has kind of come under pressure as attention goes back to the stock market. That's probably got to change for gold to really have a good recovery. And crude, well, crude too, but crude's also had a substantial flush. It's got down to near that 2008 low. There's just not a lot of room below there.
Well, let's look at a precious metal that's having a good run here. Platinum seems to have had a reversal of fate post-Volkswagen scandal. You say it's the precious metal to watch right now.
It is, because if you look at all the precious metals, I don't want to use the word cheapest. It's probably the least. It's the most inexpensive.
Right.
So you look at platinum versus gold. It's reached the lowest price ever. Now my database only goes back to 1970. That's pretty far. Platinum versus palladium, the lowest ratio in multi-years, 10, 20 years. And one of the issues with platinum is palladium was so cheap, so there's been a lot of substitution. Well, if palladium is not that cheap to platinum, it just doesn't have that attraction. So I view platinum as very attractive. It looked like it put in a bottom. To really show strength, we needed to sustain a little bit above $1,000 an ounce.
So is it a buy for you right now?
Oh, I think so. And I look at it more as an investment. I mean, these levels here in platinum are just too attractive. Unless investors expect global vehicle sales or European vehicle sales to just fall off a cliff.
Right.
Platinum is very attractive at current levels.
All right, let's wrap with the US dollar index here, doing extremely well this Tuesday. So is it time for a reversal? When will it back down a little bit here, Mike?
Well, we have to watch out in the dollar for the buy the rumor, sell the fact. The main reason the dollar has been rallying is because of yield disparity. U.S. yields are much higher than the rest of the world. But Fed tightening expectations. Now, if those expectations come out as people expect them to, the dollar might have strength, but to some extent, it's already priced in. So people bought into that rumor. If it doesn't happen, or if the Fed tightens a first time, there's a good chance the dollar might revert. But overall, the dollar's trend and strength remains up. We just have to watch what happens with the expectations if they really pan out as expected.
Mike McGlone of ETF Securities, always good having you on the show. Thanks for stopping by.
Thanks for having me.
And thanks for watching this edition of The Gold Report. We'll see you tomorrow.